Hey guys, welcome to Make Money Count. Today we're going to be talking about the Federal Reserve, what they said yesterday.
Yeah.
Market update.
So I don't know what the saying for this is. It's kind of like a misery loves company kind of thing. Like, you know how when like things are bad for you and then like you hear somebody else say like, oh man, things are so bad.
And you're like,
oh, wow, I feel better.
Yeah.
Okay, so the Federal Reserve issued a report yesterday that echoes some of the same problems that the Bank of Canada is dealing with in their reports.
Right.
And I'm sure Tiff Macklem read that and was like, oh,
that's nice.
Yeah. I mean, listen, I'm sure the writing's on the wall, but there are very similar comments being made. Some different problems, but what I want us to think about today is and how familiar this does sound. So the United States revised their growth expectations. The Federal Reserve revised the growth expectations for the United States down.
Okay.
And I'm not going to get into all the numbers, but significant drop from where they previously had it.
Right.
And then they increased their inflation expectation up well above their target range. That
right.
one, so like 3%, no longer within the 2% range. And as a result, the members of the FOMC, that's their like committee.
Yeah, FOMC.
Yeah. So the members of FOMC have this thing called the dot chart where they each project where they see interest rates going. And now 7 out of the 10 members don't see a rate drop happening in 2025 in the United States.
Question though, if the market is going to suck and there's not going to be any growth, like how does that equal inflation in this situation?
Well, so the inflation is tariff related.
Right.
So that is one-time impact, and it's the other thing. So the third thing that they mention is that there's a great degree of uncertainty. That uncertainty stems from how the tariffs are going to be or who is going to absorb those tariff increases.
Right.
So are the companies going to absorb them? Are they going to pass them off to the customer? I would imagine what happens in a situation like this is the company that's paying the tariffs tests the elasticity of the demand of their product, where they essentially start increasing their pricing, maybe not to the entirety of the tariff, or maybe they do it at the entirety of the tariff. They judge the elasticity of the demand to see how much demand falls off, and then they pare back the amount of their increase of the increase. And if the elasticity of the demand sticks, they probably dial it up even more to increase profitability.
See how far they can take it.
I mean, still a capitalist market.
Yeah.
But the Federal Reserve is judging how that tariff impact will play out on the economy and how sticky that inflationary pressure will become. They don't see the same level of labor uncertainty, so unemployment, as we see in Canada. Mm-hmm. And that works against them for inflation. If you remember, we talked about this a little bit. If the labor market remains tight, then inflation seeps into the service sector because people who work and buy things, when the price for the things that they are buying increase, they turn around to the person that they work for and they say, I want to make more money. Right. Thereby further increasing the cost of the things that they are making or the services that they are providing.
Sounds like a bit of a snowball situation.
Well, it's a snowball situation if the labor market's tight. So thankfully in Canada, we can pat ourselves on the back. We have a horrible labor market and it's only getting worse. And as a result, the inflationary pressure of the tariffs, of which they are muted in Canada because Carney capitulated on a lot of the tariff talk, right? Came back and said like, oh, we're going to be tough on tariffs, but we're not going to tariff the United States.
Right.
But that's working in our favor right now because inflation is not coming in. Not seeping into the degree that was once expected. And because the labor market's so loose, there's so many jobs available. There's so many people there's so few jobs available. There's so many people looking for jobs. As a result, that inflationary pressure doesn't seep into the service sector and further increase pricing.
Right.
The United States is a bit of an opposite problem because the labor market is tight. Anyways, all of this is to say that what the Federal Reserve is telegraphing in the United States right now is stagflation. Stagflation meaning your economy is stagnant, but your inflation is running hot. And nobody wants that. Because the only way you can instigate momentum in a stagnating economy is to decrease interest rates.
Right.
But you can't decrease interest rates if inflation's running hot.
Right.
I'm sure Trump hates that report. The problem that we could see for the United States looking forward is that it can be assumed that Trump is going to, when Powell's term is up, Trump's going to put in a new leader for the Federal Reserve. That leader will be more dovish. Powell could be considered to be more hawkish. Hawkish meaning more reluctant to decrease interest rates and get the economy moving faster and hotter, increase lending and borrowing. So Trump wants that. He's a real estate guy. He's a kind of, he's continually been overt in his gestures of wanting to remove Powell. So I think what probably happens is the next person that comes in to run the FOMC is more dovish. And in the event that inflation is sticky, if you have someone that's predisposed to want to drop interest rates, you could see inflation increase further in the United States. You could see rates coming off. You could see inflation going higher. I mean,
that just puts them in a bad position at the end of the day.
Buy Bitcoin, buy gold.
Right.
Like that's what that means.
Yeah.
And what does that do for the Canadian economy? I don't know. I think, like, listen, I'm still very firm on my assessment that you should be in a variable rate mortgage. I'm starting to see some of these reports coming out and just the indication that even the Canadian Central Bank, it's almost like they've said there's the uncertainty. I mean, we should do a study of how many times uncertainty was mentioned in both the Canadian monetary policy report and the FOMC report, because it was a lot. Uncertainty is becoming this underlying theme for central bankers. But what a central banker is saying when they're saying uncertainty is they're saying the governments are fooling around with the economies to such a degree that we haven't seen before, which, like, we no longer know how monetary policy alone can solve something.
Right.
You know what? It's almost like the government is like this. I mean, and unfortunately, the way that we elect governments and replace governments predispose them to behave neurotically because they need to accomplish. It's like a 4-year popularity contest leading up to the next popularity contest.
Yeah.
So we kind of, we reward the wrong behaviors, and as a result, we get the wrong decision making. So if you think about it, and then you got these monetary policy leaders, the Federal Reserve Chairman and the Governor of the Bank of Canada, whose job it is to keep an economy on course. Okay, well, so it's like driving a car and saying, like, keep the car in a straight line with, I could go with a few different analogies here, but with someone that is constantly trying to distract you, grabbing the wheel of the car and pointing out new spots on the map that they want to go to, and you got to listen to them.
You're right.
Like, think about it, right? Like, drive the car straight, Tiff. Okay, COVID happened. Let's pump money into the economy like no one's ever seen before, and you deal with the consequences. Don't worry, there won't be any inflation. Okay, Tiff, keep the car on the road. We're going to invite 5 million people to come into the car now and just blow up our immigration policy. But you got to keep going the same speed, right? So the same thing's happening in the United States, right? Like, Jerome Powell's trying to keep the car on the road, and Trump's saying, you know what? We're going to impose a 25% tariff around the car. All of these movements that are being performed by the governments in an attempt to gain favor for the popularity contest of being elected, or in Trump's case, of holding office until the day he dies.
Yeah. Yeah. Or his son.
All of these activities are making it much harder to govern a central bank right now.
Mm-hmm.
And you know whose fault that is? It's our fault, because we're putting the governments in.
Mm-hmm.
We put the governments in, and then the governments put into effect these programs, and these programs are killing our economies. Right? Like it's in the Canadian economy's case, it's not just immigration or COVID response. It was the way we've been dealing with housing. Like all of these activities by the governments are creating uncertainty in the market, and the uncertainty is preventing the central bankers from doing their jobs. And now what we're seeing in the verbiage in the reports that are coming out from the central banks is central banks telling us, we're going to wait and see. And when the central banks wait and see, in an environment like this, the economy does not get better.
The damage keeps happening. Yeah.
And the consumer confidence does not get better. And now are we waiting for the government to enact more stimulative policies? And then what happens in the future? I'm sure, like, guys, this clown car that we're in can handle much more. And the only thing I'm certain of more than that is that more is on its way. Anyways, hope you enjoyed today's one. Bye.